All right, so today I kind of want to go over the possible accounts for ES and crypto that I was kind of looking over the last week. I think that at least Bitcoin offers some. Uh, there are a couple alternatives that I think that are possible that have like decently high probability. The first one is I think this one is pretty standard. Where let's go to a clean chart. So if you go on the weekly, I think this one is pretty standard. Where I put this 3 here because when we do, like just looking at the structure of this 1, 2, very normal. Like there's 5 visible waves inside of this wave 1, and then this wave 2 looks, it's not steep, but at the very least, like the third wave ends at a very strong like 618 multiple, being the 5618. Now, like you could in theory say it ended here. We could drop down. We could drop down here into like the daily to try and count the legs here. But I think the important thing here is that once again the matter of the extensions. So what we can do is we can measure 0 to 3 of wave 3 to kind of see where exactly did this wave 5 end for this inner count. So we can get rid of this for now, right? I think that, let's fix the notation here. It shouldn't all be the same thing. Let's see. So if this is the 1, 2, it's the 3. I don't really think the 1 matters because I think it's pretty safe to say that the 3 ended here. Since the complexity of this correction here is very reminiscent of some kind of wave 4. So I'm kind of working backwards here by mainly using the thesis that like this specific price action here can really only be wave 4, just because of how complex it is. And I mean, this would be some kind of not some triangle, but because it's not necessarily expanding. It's not necessarily expanding because this subsequent waves are not higher than the previous, being the B and the D. This would be some kind of like sideways triple combination. I think if we just, or you could do sideways double. It depends on how you count it, but regardless, right? There's some kind of like flat structure here, right? Being an ABC, and then this would be another flat structure here, A, B, C, right? So this is the, this would be the W, this would be the X into some kind of like, well, this is another flat, right? Because this B here would be, retraces at least 100%. So, I mean, in theory, you could say, it could be a sideways triple, right? So it could be W, X, Y. I pressed the wrong one. W, X, Y, X, Z, right? Where this is some kind of like zigzag up into a zigzag down. So importance of labeling this is that like there is just almost zero possibility that this could be some kind of wave 2, which helps us in counting the overall count because then it wouldn't push us to be so bullish, right? So it kind of like contains us a little bit because now we know that, hey, some kind of 5th wave is coming up. So we should expect some kind of like pretty significant correction because what we are counting here currently is that this is some kind of macro wave 3 that is finished. So we can, let's do minute. Right. And so when we do this extension, however, like when I do the 0 to 3, it doesn't, like, it's not amazing. So what we can do is like compare the 0 to 3 and wave 1 to wave 5, which is right here. And it's like, it's again, it a little it undershoots it a little bit, right? So this would be 2618 of wave 5. And the reason why I'm kind of like okay with labeling with pushing the wave 5 so high off of these extensions is because this third wave is not really extended. It is longer than the first wave in length, but in time, right, it's not really that long. So in this case, the argument could be made whether or not the first wave was extended or the fifth wave is extended. I think in real time, like if we were trading this back in like January 2024, I don't think you would have made the thesis that, or the claim that wave 1 was extended, because this structure here, like while bullish, is not really reminiscent of what Bitcoin's more extended waves usually do, right? Usually we do get a very, very strong push up. This is a great showing though, but I think especially after this wave 4 was put in, these 1-2s, this 1-2 into another 1-2, right? And then almost triggering another 1-2 is an example. It is more reminiscent of what an extended wave should be. So also by the extensions themselves, we can kind of see that wave 5 was at least 2618 of wave 1. So, and then if we measure 0 to 3, then it's a little over the 100% mark, right? Which is what the guideline has us for an extended fifth wave. Now, the question here is, well, there are two counts. My initial count had us, like, the third wave being here. With this being the third wave, and then this being the second. But after like thinking about it more, I said this would be wave 3, and then this would be wave 4. But after thinking about it more, like, there really is just such a small possibility of this being wave 2 that I think that you kind of are forced to mark this as wave as the wave 3 top. Now you could make an argument like that this was 1-2 into the 3 into the 4 into the 5, like so. So let's fix this. All right, so something like this. However, the issue with this is that proportionally, like, this minor wave 4 is almost equivalent in length to like the macro wave 4. So the odds of this being correct is a little bit lower as well. Like while it is technically correct, right? Because I mean, Elliott wave doesn't necessarily have to deal with time. You just have to think like proportionally as well. So I think that this is probably the most correct count, where this is wave 3. And so the macro wave 4, the question is like, hey, was this the bottom, or are we still in the correction? Like, I think this is a very, very possible idea that this is just some kind of flat. Right? Like, if we look at if we look at the waves themselves, this here, right? This is a very 3-wave move down into a 3-wave move up, right? Into a very strong like impulse down, right? So that itself is the structure that we usually see in a 3-3-5. If we do an extension from here to here, we can see that it's 200% of wave A, right? So I think that is safe to say that this is at least the W, right? So W, let's just mark it for now and let's get rid of the waves. Now, the question here, like, what is this X? I mean, I think it's, well, it has to be some kind of zigzag up, right? If we go to the guideline, then, right, we just get like some kind of impulse up into a flat here, into another impulse up. And so I think like structurally it would be something like this, which kind of does make sense because, I mean, if you were to count the impulse inside of here, like assuming that this was you were marking this as the wave 4 low, like your wave 2 would be a 10% retrace. And then now, like, the importance behind marking this as the wave 4 low, so I'll just mark it in blue, is that now you're counting something like this. And what we know about retracements for wave 2 is that the odds of you being correct at a 90% retracement is very, very, very minimal, right? So this is why I was kind of rethinking the count over the last week, because we really are coming down way too low, and we still haven't even shown any signs of us being in a new impulse, right? Like theoretically, if this was wave 2, then we should be in wave 3, but there's no way from this low that like this is reminiscent of some kind of wave 3, right? So it kind of got me thinking like, hey, we're probably in some kind of correction still, and this entire move here is corrective, which also makes sense, right? Because if we think about this as being the macro wave 3 top, then wave 4s are supposed to be very long and very complex, right? So I mean, while we have yet to kind of retrace very deeply, because this wave 2, actually, wait, yeah, this wave 2 was 38.2. But it also just makes sense relatively proportionally. Well, we're kind of like almost pushing it a little bit. We have been in this kind of move sideways for quite a long time. But wave 3 took about like a year and a half, and then now we're here for a little over a year now. So the question is like, where should we expect this to end? And let's see. I mean, what we can do is just a very simple extension, right? We can do two simple extensions. One of them is, since we know that this is or we're marking this as the WXY, then we can do the first extension here. Some kind of 100% 1272. And then the next is just counting the, I think I put it here, right? Next is just counting this move down. And this is probably some kind of flat, right? A, B into some kind of like C. But the issue is like, I mean, this for sure is some kind of correction still, because it's just too difficult to count this as some kind of impulse low. I think there's two possibilities here. One is that this C is already put in, right? So 1, 2, 3, 4, and then 5. So you're counting like a truncated fifth. Like here. Let's get rid of this. Let's change this to this. Right, so you're kind of counting this as a truncated fifth, which is not ideal. But when we think about it via extensions, then wave 5 is equivalent to 38.2 of wave 1. Or if we look at it from the 0 to 3, it's not even there, right? So, I mean, the next possible count is that this is still the 4, right? And then we're looking for some kind of 5. Do I like this count? Not like I would obviously I would much prefer this is the 5, but probability wise, like outside of my bias, I mean technically like this is probably more correct because the 0 to 3 extension really is the one that is usually the most significant, and the 0 to 1 extension itself is not even that great, right? It's 38.2. So while it may be technically valid, it's not really the highest probability either. Like usually it does come down to at least the 618, right? The wave 5 usually comes down to at least the 618, and it's very difficult to assume that a truncated wave happens until price action tells you that it happened, right? What I mean by that is like now we would have to see some very strong like 1 2 into a very strong 3, and then when this 3 shows up, like this might be the too low, then we can say, okay, yeah, like this is undeniable that we're in some kind of impulse now, so this was probably the truncated 5th low. But I mean, we have like pretty consistently failed to close above like 93.3 on the weekly. So I think we're probably going to come down and sweep one more time is what my money is on, which is a little bit like interesting because I really do think like ES and Q look amazing, Elliott wave wise. So as much as I think that crypto is or was a leading indicator, it seems that well, well, actually, okay, I'm gonna take a step back here. I do think that ESNQ look generally bullish long term, like in a 4 to 5 month period time. Like if we teleport straight to July or May, then I think we will be somewhere in like 7,400. But that doesn't say, right, like we won't get a retrace first. I mean, I was kind of looking at the structure here, and this looks very, very reminiscent of some kind of diagonal, right? Right, like something like this. The guideline has it as showing as an ending diagonal, but I mean, it can also be leading as well, right? They should have labeled this as some kind of expanding diagonal, and this being a contracting diagonal. They can appear in wave 1 or wave 5. It doesn't matter. Right, so this would be some kind of like leading diagonal because my count was that. Do I have it? Okay. Personally, my count. Oh, this is on Q. You can just stick to ES. Has this being the wave 4, like this entire thing? So now that we're in this kind of like wave 5, then this would be wave 1. So maybe we will get a retracement, which would kind of line up with the crypto low that I was looking for. But yeah, I mean, the way you count diagonals is usually the subsequent waves. So this would be 1, 2, 3, 4, and then 5. Reason why I'm not really like a fan of this right now is because extension wise, it really doesn't line up pretty much anywhere. So, I mean, the next possible count is that this is a 1-2 into a 1-2, which, it's a 1-2, 1-2, 1-2, which is definitely even lower probability of being correct, right? Because I mean, it's like the odds of that being true is just so low. But I mean, that it could theoretically be correct if this is a triangle on NQ, because then we will get a really, really strong push up. I was kind of hoping we would close above 937 here on the 195 while we were talking. But it doesn't look like we're going to do that. So I'm personally, well, I think this 12-hour, like this structure here is quite strong for a follow through. Like I think we'll at least test this high today. But regardless, I think this is a good example of reassessing based off of proportions in time. So ideally, right, all your counts are relatively aligned when it comes to the overall market. Like if I'm counting ES and Q, I can't really have a glaring difference between the two, right? So for one of them was that if I grab the 1, 2, 3, 4, 5, let's just make this minor for now, or minute. One of them was that I have ES being this the wave 3 top, but on NQ I'm pretty sure like I have this as the wave 3 top. This is a very striking difference because I mean it is very difficult to count this as some kind of flat the way I did for ES. Because ES at least stays within the boundaries of the 382, whereas NQ retraces all the way up to the, I think like the 1618. Yeah. So technically, right, this is considered legal under the rules, but then we go into the probabilities and it's not amazing, right? So I think like the importance of where this 3 lies is very high, because if it lies here, then this then increases the probability of this being some kind of longer correction, right? Like a 3-wave move here. Whereas if it's here, then like it wouldn't really make sense to still be in some kind of correction, because then this would be the count instead. Unfortunately, this is one of those cases where I could see an argument being made for both because of what I just showed, right? The NQ chart kind of going way too high to count that as a flat as well. The only reason why I'm kind of accepting it the way it is right now is because this is very reminiscent of a triangle. And like structurally, on the weekly, this looks pretty good. It looks like we are going to close somewhere above like 7K. I mean, the structure here, right? The liquidity. I mean, we do need to close over the liquidity, right? To kind of continue the trend here. But then you start thinking about like, oh, why would crypto start lagging now? Like, why would there be a divergence when it has been leading for so long? So you start to like recount things, and the importance here is just being able to like make that distinction before entering like those multi-month swings, which is why I haven't really made any in most recent times. Besides like the IBM thing, I think IBM looks fine. It doesn't look relatively connected to the market anyways. But one other thing that I was looking at was just where specific tickers were headed towards. Like the Netflix thing that we've been talking about the last couple of weeks, where because of this close, it kind of confirmed the move down to 88. I mean, I did think it would move much faster than this, but clearly not. But I mean, once we do enter this low around like 87 or even 83, then I don't see it going much lower, right? And then Apple itself has hit the 100% extension of like this 3-wave move down. So I think that's done as well. I mean, if it does close above or like below 254, then yeah, it'll come down all the way to 245. But yeah, I mean the specific tickets look fine, to be honest. Like Cat kind of recovered quite well. It's not out of the possible corrective count yet, but I do think that the market is shaping to move quite a bit higher, at least in the next 4 or 5 months, right? The correction itself, if it does happen, assuming that this is like the diagonal, it should only last maybe until the end of January, like max. I don't see us taking much longer than that, like maybe first week of February for the correction to be over. But even then, like I don't see many things that you could short. Like Google looks, well, I mean, technically, right, this would be some kind of flat if the diagonal does happen, right? It would be like this. But yeah, I don't think there's much use in predicting something like that just yet until it kind of like shows. Because another thing that is very common, or not very, but that is common, is that there are sometimes like spikes near the termination of a diagonal. So spikes being like as we draw the shape, wave 5 does sometime like spike up. Which is another reason why I hate counting diagonals, because of that idea. Like usually when you are nearing the end of some kind of count, that is the highest risk reward of getting in. Like when you're assuming some kind of 2 is being put in, like this would be the highest risk reward, right? Like the golden zone. However, when it comes to diagonals and you're trying to look for a short entry on the 5, you don't know where that top is going to be, because sometimes it will just spike past that probable area. Like the probable area right now would be right here at the 618, but it technically has all of this left before it is invalid. Because once it breaks above the 100%, then it isn't a diagonal anymore, because then this 5th wave, let's just draw it. This 5th wave would be longer than the 3rd, which breaks the rule. Because obviously the 3rd wave is already shorter than this wave 1. So the 3rd wave cannot be the shortest. But yeah, so that is kind of my thoughts on how I approach finding these biases or biases for the overall market. And I think it's very important to be able to do this, because it does give you that outlook for the long term. And I know that's one of the things you wanted to kind of like focus on. And this is another big reason as to why I'm like pretty comfortable dollar cost averaging into Netflix like this month. Like based off of the claims I just made, I do think that if there is a correction, then it'll end around February, which is why I decided to give myself 2 months, right? Like if you go back to the message that I sent in the chat, I'm giving myself 2 months until the end of February to fully scale into the position, because timing wise, around March is when we should be in some kind of impulse. So like the accumulation phase inside of like here should be like fine, right? I don't really care where I am as long as it's not below 83, because eventually like we should be much higher. That's what I kind of did for Ulta. Well, I accumulated like over here, but yeah, I mean, that is what I have for now. Um, I think what I kind of want you to do over the weekend is I didn't show the NQ count like specifically because I did want to see if you were able to break down the differences between counting this as the wave 3 or counting this as the wave 3. So the importance here is not really anything back here. It's just labeling the possible inner count for this move, this corrective move down into this corrective move up, into this corrective move down. Or if you are going to label this as the wave 3 top, then then you do kind of have to go back in time a bit and look to the extensions over here to make a claim that what's it called? That this was some kind of like wave 5 move up, right? Like the inner wave 5. You're probably gonna have to drop down to like the 195 or something. But right, the big thing here is being able to break down this this specific section into either a corrective move or an impulse. And if you can't do one, then just say why. Like, oh, I can't make this into a corrective move because the impulse count looks just way too good, or like it, blah blah blah, or vice versa. You know, like if it's a corrective move up, like the odds of it being a correct impulse is very low because I can't see 5 waves, or like the extensions don't align, etc., etc. Sound good? All right. Mm-hmm. Do you want this to be recorded or? Okay. Average trade, like how much I'm risking via my portfolio, it's a little bit. So what I do is a little bit special. I have my long-term portfolio, which is just a separate account, and then I kind of, I leave 250K as an options portfolio account or like my futures trading account to kind of just play with. So technically I'm using like 10 to 15% of that account per trade, but I think that's way too high. The only reason I'm doing that is because I'm like everything above 250K at the end of the year, I just withdraw. And then I just reset at 250. But if I think about it in terms of my overall like liquidity, then I'm only risking like 1 to 2% per trade. I don't really think you should go higher than 5 if you're under like 100K especially, or even like near 100K. Mm-hmm. Well, the importance here is that, or like when we do the extension, technically the invalidation point for this here is, I would say like the 8, like over here at 45.30. Right now, I'm not too pressed because my intended position for this is going to be at least like 16 contracts. So these 3 contracts that I'm holding right now is not like, yeah, it kind of hurts, but I ideally, like when I'm looking to the left, we see the rejections here, like near 45.30. So ideally, I can kind of like get closer to that than this 26 tag. And then what we can also kind of claim is like usually trends end at the 1618, right? So this move up or this uptrend should kind of come to a close near 45.34. Obviously, if we close above, that's a really bad sign. But my money is still obviously on us coming down. But I wouldn't scale in here because there's no reason to just yet, because the probability of you being in an impulse, or like the probability of us still coming up, is decently high. I would say it's higher than coming down for now. Truthfully, the invalidation point is like somewhere above here, because then we get into that area where, if I am assuming that this is some kind of like 1, 2, then you wouldn't want anything further than like the 854. Because anything above this, you get into the realm of like the 90% retracement, which is very, very low. But yeah. That's kind of my thoughts there. Yeah. So to reiterate for the homework, just focus on this, right? Is this wave 3? Is this wave 3? And then why? The why is very important, because if you are able to break down this, then I think you are a very good Eliotician, or at least like you understand the concepts of like weighing the probabilities very well. But it could just all be confirmation bias for me. I don't know. I mean, I try to be as objective as possible, because I do like things to be very black or white. But there's a lot of artistic freedom when it comes to Elliott wave, unfortunately. So yeah, I'll assign you this for now for the weekend, and then I will see you again on Monday. Sounds good? All right. Let me stop the recording here.